Hello, and welcome. Welcome everyone, wherever you are, to this pension session. I'm Denise Gustin-Gardella, and I'm coming from the Geneva office, the Fund's Geneva office, and I'm accompanied by Dilbar Miradova, who is in the New York office. She will be helping with the questions later in the presentation. So today's session is about separating from service with at least 5 years of contributory service and at any age. So as long as you have contributed at least 5 years in the pension fund, by the time you separate from service, this session will be relevant for you. Yesterday, there was a session which Dilbar gave about separating with less than 5 years of contributory service. So if you are in that category and you missed that session, you will be able to view the recording through the link on our website, which I will show you later in the presentation how to navigate there from our website. You're welcome to stay even if you are leaving with less than 5 years, but we will focus on the benefit options for those who have at least 5 years of contributory service when they separate. And the idea is that we have 2 hours together, and I have a number of slides to cover with information to help you prepare for separation and to understand your pension a little better and what your options will be when you separate and what you need to do to receive your pension. And then near the end, we will open up the Q&A for you to submit questions that you might still have that I maybe didn't address fully. And then Dilbar will review the questions and choose the ones that are most relevant to today's session, and then I'll answer them live. So I hope that this will be an interesting and helpful session for you. At the end of this presentation, we will be sharing a link in our Q&A to a survey, and we ask if you would please complete that survey so that you give us feedback about the town hall, and it will help us improve so that we can best serve you. So I'm going to now share the presentation. Just a moment while I share my screen. And okay. So as I mentioned, yesterday we had a session for those separating with less than 5 years of contributory service. Today, more than 5 years, or at least 5 years or more. And tomorrow, there will be a session on member self-service. That is your access to your pension account. And you will see the services that are available there, the documentation that's available, and the functionality there. That's your window into your pension account with us. So that will be tomorrow's session. And then next week, we will repeat these 3 sessions, but in French. So Tuesday, Wednesday, Thursday, same time, same topics, but presented to you in French. And all of these sessions are being recorded, and they will be available for you to watch. The links are on our website, and they're hosted on our YouTube channel. The presentation, the slides, will also be available to you through the same page on our website. So if you can't stay for the whole session, just know that you can watch the rest of it through the link that is on our website. Now, a disclaimer, which we always give, is that any of the information that I give you today is going to be to the best of my ability to provide this in a straightforward and easy to understand way, but our regulations and rules are the authoritative source in the event that there's any discrepancy between those regulations and rules and what I say or what's in the slides. So today we have 4 main parts of the presentation. First will be a slight overview of the fund, very brief, and some key principles that determine your benefit options. Then we'll go into more detail about those benefit options, the different retirement benefits, for example. And then we move into a more practical part of the presentation, which is about your separation from service and how you can prepare, what types of actions you need to take, and documents you need to complete and provide to the fund. And then finally, just briefly, will be a look at our pension tools that are available to you. As I mentioned, tomorrow is a dedicated session to member self-service, so you'll have more information tomorrow on member self-service, but I will touch upon it today. And then finally, how you can contact us if you need to reach out to the fund. So getting started, just to have an overview of what we hope you will get out of this presentation is to understand your benefit options and what choices will be open to you at separation. So assuming you have or will have 5 years or more of contributory service with the fund at your time of separation, your options will depend on your age, for example. And we would like you to be aware of what your options are when you separate and have an idea of how the benefits are calculated so that you can make an informed decision of which benefit is right for you. We also hope that you'll have a better understanding of what you need to do to prepare for separation as far as your pension is concerned, and to know how to find more information if you need it through the information on our website and the tools available to you in member self-service. So as a brief overview of the fund, so I'm assuming you're all participants in the pension fund and have been for at least 5 years, but I know that a lot of people don't really look into their pension until they're about to separate or they are getting close to retirement. We hope that people will start learning about their pension from the time they join, but we understand that pension often seems like something far away. So the type of pension plan that you are a member of is a defined benefit plan. This means that your benefit is not dependent on the investment return. It is based on our rules and regulations, so on the formula that will determine what your benefit will be based on your length of service and your average salary level or income level. Your retirement benefit is guaranteed, and the amount is based on your years of contributory service and your average income level. So it's not based on any investment returns like some other types of retirement plans. This illustration is to give you an idea of how the pension fund works. So you see the big blue shape in the middle. Imagine that the contributions that you pay from your salary and your employer pays on your behalf to the fund go into this big pool, and investment income also goes into this pool. From that large pool of investments and contributions, the pension fund pays the benefits that our clients are entitled to. So that's retirement benefits, disability benefits, and dependent benefits like child benefits or surviving spouses benefits. And then a small portion of it also goes to pay for the administration of the fund. Generally speaking, the fund is solvent, which means we're still healthy. We have regular actuarial evaluations of the fund's financial situation. And if you would like to read more or learn more about that in depth, there is information on our website. And there is also information about the investment side of the pension fund, which you can access on our website. Some recent events in the world since the beginning of the year have led to questions about the fund's financial situation, and we recommend that if you haven't seen this or didn't attend this town hall that was on the 11th of April, headed by our Chief Executive of Pension Administration and the representative for investment, that you review that recording, because they addressed this issue about the financial situation. And just briefly to say that although there might be quite a lot of downsizing and people being separated in the whole system from all of our participants worldwide, that even if there are fewer participants who are paying contributions to the fund is still financially secure, and we can pay the benefits that are due to our participants and our retirees and beneficiaries. So there might have been concern from your side if people are not paying into the fund, how will the fund be able to pay benefits? Just to reiterate that the fund is seen to be still financially secure, and even with fewer participants paying contributions, the fund is healthy and will be able to pay your pension benefits. So now we'll move to the part about your entitlements and how you know what your options will be regarding your pension when you separate. The length of time that you've been a participant will determine your benefit options. So if you have at least 5 years of contributory service, that means you have vested pension rights, which means that you have the right to a monthly pension benefit, a retirement benefit for life. When you separate from service, you will have that entitlement. Now, you might not have the entitlement to start receiving it immediately because of your age, but you will have the right to a retirement benefit for life. You do not have to make a decision immediately when you separate from service. You have up to 36 months from your separation date to make a decision. It's important that you do make a decision within the 36 months, otherwise we will make a decision for you. And if we still don't hear from you, you could risk forfeiting your pension benefit. Now, if you separate from service and you are still not yet your early retirement age, you will still be entitled to a pension benefit for life, but you would not be able to receive it just yet. So we need to look at the different ages that are important so that you understand what your options are when you separate. Let's start with normal retirement age. For those of you who might have started before January 1990, you have a retirement age of 60. If you join the pension fund on or after January 1990, your retirement age is 62, unless it is that you joined on or after January 1st, 2014, then your normal retirement age is 65. So if you work up into your normal retirement age, when you separate, you are entitled to a normal retirement benefit, and that is payable from the day after separation. If you don't work up into your normal retirement age, you would not be entitled to the normal retirement benefit, but some other type of benefit. So let's look at the next retirement age, which is early retirement age. If your normal retirement age is 60 or 62, your early retirement age is 55. And if your normal retirement age is 65, your early retirement age is 58. So early retirement age, this is the age up to which you need to participate in the fund if you want to separate and start receiving a benefit as from the date after separation. So the benefit in an early retirement benefit is going to be less than if you worked up into your normal retirement age, but it is a benefit that you can start to receive immediately upon separation. And anywhere in between 55 or 58 and your normal retirement age, you would be entitled to an early retirement benefit. But once you reach your normal retirement age, your only option is a normal retirement benefit. If you haven't even reached your early retirement age when you separate from service, then you're still entitled to a retirement benefit because you have at least 5 years of contributory service, but you just can't start receiving it immediately upon separation because you're still too young. So this benefit is called a deferred retirement benefit, and that is an option that's open to you as a retirement benefit if you have separated younger than your early retirement age of 55 or 58, whichever the case may be. It's possible you will have several of these options when you separate, depending on your age, and I'll go into that in more detail. Now, there is another option that is a withdrawal settlement. The header on this slide, I'm sorry, it's a little bit, it's not updated, so I should correct it. But it is, these are options if you separate before your normal retirement age. So if you separate any time before your normal retirement age, you can take a withdrawal settlement, option 1. And this is a benefit that is a one-time payment of your contributions and interest. So this is not a retirement benefit for life. This is deciding to take all of your own contributions that you paid from your salary with interest and then cutting your ties with the fund. So that's a one-time withdrawal settlement. Or you could have a deferred retirement benefit, as I mentioned, or if you separate, you still have up to 36 months to make a decision about your different benefits. And if you do return to active participation in the fund within 36 months, then your pension just continues. If you haven't taken any payment, then you could just leave your pension with the pension fund. If you return within 36 months, then your participation continues with that break of when you did not contribute. So if you separate, as I mentioned, anytime before your normal retirement age, you will have the options listed here, which are withdrawal settlement, deferred retirement benefit, something that you'll get later once you've reached a certain age, at least your early retirement age. Or if you work up until your early retirement age, then you could take an early retirement benefit. And on the other hand, if you work up into normal retirement age, that is your only option. Then you cannot take a withdrawal settlement anymore. So if you're close to normal retirement age and you think you want a one-time payout of your contributions and no retirement benefit, then you would need to separate before your normal retirement age. So the options will depend on your age at separation. That's the main thing to realize. And then when you run estimates, you will see what the different options are based on the separation date and what your age would be at that separation date. So you could have multiple options available to you unless you work to your normal retirement age. Okay, so in another format, to just put it like this, if you have 5 years or more, which is the subject of today's town hall, then you see these 3 retirement options on your right, but also you have the withdrawal settlement option. Withdrawal settlement being the only option for those who have less than 5 years when they separate. And again, you have up to 36 months from separation to make a decision on your benefit. These charts are for the 3 different scenarios. There's 2 on this slide and 1 on the next, depending on what your normal retirement age is. Let's look at scenario 2 because I think most of the participants nowadays fall in this category or the next one, but they all have the same principle, which is if you have at least 5 years of contributory service and you separate before you reach your early retirement age, then you have only 2 options. You'll have a withdrawal settlement option, one-time payout, or a deferred retirement benefit, which is a monthly benefit for life. If you work up to at least your early retirement age of 55 or 58, you have an additional option. You have a third one, which is the early retirement benefit. And that benefit is one that you can start receiving from the time you separate. And this is the scenario from early retirement age up to a day before you reach your normal retirement age. These would be the 3 options open to you. And I'll go over what they are in more detail. Once you reach your normal retirement age, that's the only benefit option open to you. So whether that's 62 or 65. Again, these slides will be shared and available on the website. So what should you do prior to separation? We recommend that you check your annual pension statement. This is a record that is created every year of your pension account, and it includes your contributory service, how much you've contributed and the interest that it has accrued, and it also shows what your pensionable remuneration rates are. So what rate is used to determine how much you've been paying every month into the fund. And the statements are a balance at the end of December of the calendar year. They are posted only inside your member self-service account. So you do need to register with member self-service to access the pension statement. They're posted there in May, usually May of the year. So the one that was most recently posted is your statement for 2024. And it will show your balance at the end of December of 2024. The other thing we say that you should do prior to separation is run an estimate or multiple estimates of your future entitlement. This is another reason to register with member self-service if you haven't already, because this is where you can run estimates yourself. And you just enter a separation date in the future, and then depending on your age at that date, you will see the resulting estimate with whichever options will be open to you at that date and the estimated amounts. These are all based in US dollars because the pension fund is a US dollar based fund, and the estimates are reflected in US dollars. It doesn't mean that you have to be paid your benefit in dollars, but everything's calculated initially in dollars. This is what your pension statement looks like. So if you haven't ever looked at one of these, this is how they look. And as I said, they're produced every year. We encourage you to review them every year. And if you see anything that looks incorrect under Section A, personal data, we recommend that you first check with your HR office or your staff pension committee secretary if you're a member of a specialized agency, so that any marital status or maybe an incorrect date of birth or something like that, spelling of your name, would be corrected. And then through them, the pension fund gets the update and the correction, which would then show on your next pension statement. This statement also shows you your length of contributory service, the date that you started contributing, and how many years and months and days you contributed. So you see the cumulative length of contributory service at the end of December for the given year. You also have the amount of your contributions and interest, the cumulative total, and the one for the year in question for the statement. Then if you happen to have validated or restored any period, that is listed in Section D. I won't go into too much detail about validation and restoration. It is a way to either pay back or pay for a period that you were not eligible to participate yet, maybe in the beginning of your contract, or that you already were a member of the fund, took a withdrawal settlement, and then paid it back when you came back into the fund. So if that was in this year in question, it would show up in Section D. And then Section E on the bottom right is a table of different pensionable remuneration rates. So your pensionable remuneration rate is dependent on your level and step of your salary. So it's like a salary scale, but it's just for determining your pension contributions. And you can see the different rates listed here with the effective date of that rate and how many months that rate applied. And the reason this is interesting to know is that to calculate your pension, we look at the highest average 36 months of rates in your last 5 years of service. So ideally, your rates go up the longer your career is, and hopefully highest in your last 5 years of service. This is an example of an estimate from your member self-service account. Depending on the date that you enter when you go to run the estimate, you will have whatever options are available. So you can see in this example, the person's separation date is before they even reach their early retirement age, because they have only the options for a deferred retirement benefit and a withdrawal settlement. And then it gives the amount that would be payable at age 62, or at your normal retirement age. And then in the event of your death, the amount of the surviving spouse, or if you take a withdrawal settlement, you see the one-time payment amount there. Similarly, if you put in a separation date when you have already reached your normal retirement age, you're going to see just the figures for normal retirement benefit with or without a lump sum option. I'll go into that in a little more detail, but just to know that with the early retirement benefit and the normal retirement benefit, you have a lump sum option, meaning you can take part of it as a lump sum and the rest as a monthly benefit for life. And in either case, there is a surviving spouse's benefit as listed here in the estimate. And there's no other options available to you. So just a retirement benefit with or without a lump sum. So those are the two things that we had said at least start doing before you separate, and get the options in a little bit more detail. To let you know that we have a very good informative video available to you on the benefit options that I will be covering. And I won't be playing the video now, but this will summarize the different benefits in less than 10 minutes. And I highly encourage you to watch this video and the others that are relevant to you for preparing for separation. There's one on separation itself, but this one on benefit options will explain them to you. But I'm going to go over them in a little more detail right now. The benefits that will be open to you, as I mentioned, will depend on your age at separation, for example. And we also have these charts called benefit eligibility chart and benefit comparison chart available on our website for you to refer to. After this session, if you would like to see the charts, how the different benefits are laid out, depending on your age at separation and how long you contributed. We're talking about those who have at least 5 years of contributory service, but the charts are a very helpful way to see it all in one page, and whether they have other related benefits associated with them. So now to the different benefits. The first one being a withdrawal settlement, which is a one-time payment of your contributions. So when I say your contributions, I am referring to the ones that you paid from your salary, not the contributions that your employer paid on your behalf. So that's a very frequently asked question that the fund receives. When will I get my organization's contributions? And they are not part of a specific calculation. So the answer is that they're not paid out to you as a part of the withdrawal settlement. And if you recall the defined benefit plan with the pool of contributions and investment income, and that goes to pay all of the benefits, the organization's contributions are put in this pool. But if you want a withdrawal settlement, which is one of your benefit options, what we pay back to you is what you paid from your salary, plus 3.25% compound interest. And let me go over how the withdrawal settlement is calculated as well. So if you separate with at least 5 years of contributory service, which is most of you, I assume, you will get your contributions and interest plus an increase amount for every year beyond 5 years. And that's a 10% increase per year up to a maximum 100% increase. If you want to choose a withdrawal settlement, at the bottom of this slide, we say how to fill out a PI, but we will look at that later in the presentation. But let me just go to the calculations. This one will not be relevant to you if you already have more than 5 years of contributory service, but the withdrawal settlement very basically is your contributions and interest paid out to you. Now, when you have, like in the next scenario, anywhere more than 5 years, so in this case, this example, we have 7.5 years of contributory service, then you're going to get your contributions and interest with an increase of 25% because you have 2.5 years beyond 5 years. And for each year, you get a 10% increase, and it is prorated. So you can see that it's 25% increase of the contribution and interest amount. So the withdrawal settlement in this example would be $62,500. You can see that that increase of $12,500 means you're paid more than your own contributions and interest. And if you have contributed at least 15 years, then your contributions and interest will be doubled. So you have a 100% increase. Anything more than 15 years, for example, 20 years, you still have a 100% increase, but it's no more than 100%. So your 20 years of contributions and interest, for example, are $280,000. You have a 100% increase for a withdrawal settlement of $560,000. One-time payment made to you and no other benefits payable to you from the fund if you do choose a withdrawal settlement. Now, one thing to know, if you separate and take a withdrawal settlement and then you do come back to active participation in the fund, you can pay that withdrawal settlement back in a process called restoration. Restoration has to be requested within your first year back, or you would be time barred. So it's very important that you would request it within your first year of rejoining the fund. And then you pay back the withdrawal settlement with interest. And what you do is you're putting all those years of contribution of contributory service back into your account. So let's say you separated with 20 years of contributory service, took a withdrawal settlement, and then you were reemployed and became a participant in the fund again and chose to restore, paid all of your withdrawal settlement and interest back, then you would have 20 years credited to your account already in your new participation. Now, you're not going to get your old normal retirement age back. So that's one thing to be aware of. With your normal retirement age would be whatever the age, which would most likely be 65 if you're in the future going to be reemployed, but you would be able to have all of those years of contributory service back in your account, meaning you would be eligible for a retirement benefit when you again separate from service. So that was the withdrawal settlement. The other benefits that I'll talk about are the retirement benefits. These are the monthly benefits for life. These are adjusted for cost of living over time, and in the event of your death, there are survivor's benefits attached to them. Now, that was not the case with the withdrawal settlement, so this is one of the main differences as well, that in the event of your death, there could be survivors who are entitled to a benefit from the fund. Some of the main factors that go into the determination of your pension benefit, your retirement benefit, are the length of your contributory service, your age at separation. So we already talked about that with the early retirement age and normal retirement age. The rate of accumulation which you acquire based on the length of your contributory service. So the longer you contribute, the higher your rate of accumulation will be, and therefore the higher your pension benefit will be. This is a factor that's used in the calculation. So the rate of accumulation is like a percentage that's determined based on the length of your contributory service. The other part of the calculation is your final average remuneration. And if you recall, I mentioned that on your pension statement, you can see your different pensionable remuneration rates, and that for calculating your benefit, we look at the highest average of the highest 36 months rates in your last 5 years of service. And so the higher your income level, then relatively speaking, the higher your pensionable remuneration rate would be, and the higher your pension benefit. So how to calculate the retirement benefit? You multiply the rate of accumulation, which is connected to your length of contributory service, by your final average remuneration, and that gives an annual pension amount for a normal retirement benefit. If you are separating earlier than that and you're entitled to an early retirement benefit, there is a reduction to that amount that's applied, and what you see in your estimate, it's already been calculated. The reduction's already factored in, so you don't have to make any further calculations. But just so you know that this basic calculation of rate of accumulation, meaning how long you've contributed, and your final average remuneration, meaning what was your income level. The higher your income level, the higher your pension will be. All of the benefits, as I said, are calculated initially in US dollars because we're a dollar fund, dollar-based fund, but you can request your retirement benefit in any of these 18 currencies. These are our payroll currencies that the fund can issue your benefit in. We have other sessions that go into more detail about payments. Just be aware you can request your benefit in a currency other than these 18, but it will be then not using the UN's exchange rate to convert to these payroll currencies as they are listed here. These are currently the executable currencies that we can pay benefits in. Another factor, as we mentioned, was age. So if you have reached your normal retirement age of 62, for example, but your organization might have a mandatory age of separation that's 65. So currently in the UN system, the mandatory age of separation is 65. You can work until age 65, but just be aware that you were already entitled to a normal retirement benefit from the time you reached age 62, if that's your normal retirement age. You would just continue to contribute to the fund and increase your contributory service and therefore your rate of accumulation. And when you separate, you would be entitled to a normal retirement benefit. So the pension fund's determination of your normal retirement age is not affected by the UN's staff regulation about your mandatory age of separation. So just to point out that even if you can work until age 65, if your normal retirement age is less than that, you're already entitled at your normal retirement age to a normal retirement benefit. Here to give you some more detail in case you're curious, the rate of accumulation, how do we calculate that? So I mentioned that it's based on your length of contributory service. The longer you contribute, the higher your rate of accumulation will be. This example shows you that it's broken down into periods of years. So for the first 5 years of contributory service, there's a 1.5% applied for a maximum 7.5%. The following 5 years, 1.75% per year for a maximum 8.75%, and so on, as you can see for these brackets of periods. The maximum rate of accumulation that you can attain is 70%. That is based on a career of 38.75 years. Even if you worked beyond that, you would not get more than 70% as a rate of accumulation. So in our regulations, this is the maximum rate of accumulation that is used in the calculation. Not many people get to that 38.75 years, but just to be aware that this is the maximum and this is how the rate of accumulation is calculated. So you see that once you've done 5 or 10 years of contributory service, the percentage increases. But once you've reached 35 years, it goes down to 1% per year. So that's just to explain a little bit about how the rate of accumulation is calculated, and that is one of the main factors in the calculation of your pension benefit. And the other being the final average remuneration. So on the right-hand side of this slide, you see an enlargement of the section of your pension statement where it's highlighted what the highest 36 months pensionable remuneration rates are, and then the average of that is used in the calculation. And that's from the last 5 years of service. So it could be that your pensionable remuneration rates fluctuate, especially if you're paid in a local currency that then gets converted to dollars. So if the exchange rate fluctuates, your dollar value would fluctuate. For professional staff, there's one pensionable remuneration scale worldwide, which is in US dollars. But for general service and national officer staff, the pensionable remuneration rates are often one of the lines of your salary scale of your duty station, and it will be in your local currency. When your contributions are reported to the fund, they are converted into US dollars, and then when you look at your pension statement, everything's reflected in US dollars, which is why you might see fluctuations even month to month for your pensionable remuneration rates on your annual statement. Okay, now in more detail, the normal retirement benefit. It is a benefit that you can get only if you work up until your normal retirement age. So that means you've worked up until at least age 62 or 65, or 60 if you happen to be in that group who has the normal retirement age of 60. It's a monthly benefit for life. It's adjusted for cost of living over time. That is based on the CPI of the United States, because as I said, it's a US dollar based fund. And you also can take your benefit as a lump sum with a reduced monthly benefit. If you have a child under age 21 when you separate, you can receive a child's benefit on behalf of that child up until the time they reach age 21. And then in the event of your death, if you're married to the spouse that you were married to at separation from service, then that spouse is automatically entitled to a surviving spouse's benefit in the event of your death. And the surviving spouse will receive a benefit for life from the time of your death. And it's 1/2 of what your benefit was in the amount of your benefit. Here's an example of the estimate. One thing to note is even if you take a lump sum and a reduced monthly benefit, your surviving spouse will receive an amount which is as if you chose only a monthly benefit. So that's quite generous, I think, and that's what is highlighted here in the green arrows that go from the left to that amount called prospective survivor. Now, how you'll decide whether or not to take a lump sum will be a very personal decision, whether or not you have certain maybe debts to pay, or if you need a large sum of money that you would want to take a lump sum amount when you retire. It's also an option here with the early retirement benefit. And first, let me go over the early retirement benefit, and then we can talk about how you can maybe consider whether or not the lump sum option is interesting to you. So early retirement benefit, you have to have worked up until at least your early retirement age of 55 or 58, but you have not yet reached your normal retirement age. And it's a monthly benefit for life. There's also a surviving spouse's benefit payable in the event of your death. For a child, there is a child's benefit payable if they're under age 21, but only if their under 21 by the time you reach your normal retirement age. So let's say you retire at age 56, your normal retirement age is 62, you're receiving your benefit for 6 years, and then when you're 62, your child is still under age 21. Only then would you start receiving the child's benefit in addition to your own pension benefit, and it's paid until the child reaches age 21. I mentioned that there's a reduction applied, so you had this general calculation, rate of accumulation times final average remuneration. And if you take an early retirement benefit, the benefit is less than if you worked until your normal retirement age, because you're separating at a younger age and you'll start receiving your benefit at a younger age. So how much is it reduced? That depends on a few factors. Depends on how long you've contributed to the fund and your age at separation. So some of the landmark years to keep in mind. If you separate with early retirement and you're under 25 years of contributory service, you will have a 6% reduction applied to your benefit per year. So each year that you're under your normal retirement age, it's 6% reduction per year. You can reach at least 25 years of contributory service. Then you have a smaller reduction factor. So this is why for some people who are close to 25 years, it's interesting to try to reach the 25 years of contributory service if you're separating on early retirement, because then your reduction is less. It means your benefit would be a little bit higher than if you separated with less than 25 years of service on an early retirement. Depending on what your early retirement age is, the reduction factor will differ. So if your early retirement age is 55 and you have at least 25 years of contributory service, but not yet 30, then your reduction factor is 3% per year. If your early retirement age is 58 and you have 25 years or more of contributory service, it's a 4% reduction. So you can see that if you are separating on early retirement and you can get to the 25-year mark, then it's advantageous to you because then your benefit would be reduced less. So the example, for instance, is if you separate and you have more than 5 years of between your early retirement, or between the date you separate, your age at separation, and your normal retirement age. Let's take an example. You separated age 56 and your normal retirement age is 62. So that's 6 years before your normal retirement age. If you have 25 years of contributory service, that's going to be a 3% per year reduction. But that can only apply to a maximum of 5 years. And remember, you're 6 years younger than your normal retirement age. So you'll have 3% reduction for 5 of those years. And then for the 6th year, it will be a 6% reduction that's applied. But it's still better than having 6 years times 6%. So just be aware that this lower reduction factor applies to a maximum of 5 years, but it is beneficial for you if you can get to the 25-year point, if you're separating on early retirement. If you're separating on regular or normal retirement, then it doesn't have any, there's no reduction factor, so this is not really a topic related to the normal retirement benefit. Of course, the longer you contribute, the higher your benefit will be. But these reduction factors and the 25-year mark is really relevant to early retirement. Here's an example, even with figures. So if you have a final average remuneration of 192,000, rate of accumulation 36.25%, you can see that the pension would be 69,796. But then because you are separating on early retirement, the reduction factor is applied. Here, 6% per year. The person is separating 7 years before their normal retirement age, so 7 times 6 is 42%, which is then applied to that first amount of 69,000, and you get a resulting yearly amount of 40,000. Now, when you see your estimate, this 40,000 is what would be showing, so you don't have to do any calculations, but this is just so that you understand the way that the reduction factor works. And as I said, if you can get to a point of 25 years or 30 years, then it could help you have a smaller reduction to your early retirement benefit amount. And this is an example of the estimate with early retirement with and without lump sum. Again, the surviving spouse's benefit is there, and it's the same regardless of whether you took a lump sum. Now, lump sum option. It's known as a 1/3 lump sum. That is the maximum lump sum available. And when you run your estimate, it will default to the maximum lump sum option. So if I go back a slide, you'll see here this lump sum maximum is what will go by default in your estimate. You can take a smaller lump sum than that. And when you run your estimate, you just type in the field that's open to you, an amount of a lump sum. This will be all in US dollars. And it cannot be more than your maximum. But if you take something less than the maximum, then the resulting monthly benefit for life would be adjusted depending on what the amount of your lump sum is. So it is a very personal choice whether or not you want to take a lump sum. Generally speaking, the lump sum is your own contributions and interest amount, and then you're still getting a pension, a monthly pension benefit for life. You can have your lump sum paid into another currency or a different bank account from your monthly benefit. You would probably want to know what your tax obligations are, and the fund unfortunately cannot advise on that because we don't know for every country what the tax laws are, but that is sometimes a factor for people in making the decision of whether or not to take a lump sum and how much of a lump sum they want to take. So you can run estimates putting in different amounts of lump sum and see if the amount that you would get as a monthly benefit is enough to live on, and if you need that large amount paid up at separation, it could be interesting to you. So we would suggest that you decide, you know, what you need as an amount from your benefit, maybe upfront as a part of a lump sum, and then knowing that the remaining benefit is paid monthly, adjusted for cost of living, but yeah, that's really just you know, a personal choice, and it is an option. So we would fill out your payment instruction with or without lump sum if you're taking early or normal retirement benefit. Then finally, this deferred retirement benefit option. This is if you separate and you're not yet early retirement age, you have a monthly benefit for life, but by default, we assume you're not going to start receiving the payment until you've reached your normal retirement age. So let's say you separated age 53 with 20 years of contributory service, and you don't want to take a withdrawal settlement, you want a monthly benefit for life. Well, you could choose a deferred retirement benefit. That would be your only option for a monthly retirement benefit if you're not yet early retirement age when you separate from service. So when you run your estimate, you'll see an amount for a deferred retirement benefit, and the amount is assuming that you're waiting until your normal retirement age to start getting the payment. Now, you can choose to receive it earlier. You will have to wait until you've reached at least age 55 or 58. So in my example, you separated at age 53, I think I said, and then you could start receiving your deferred retirement benefit when you reached age 58, but then a reduction will be applied. So that you would have to check with us how much your benefit would be, because your estimate currently will show you the amount at normal retirement age and not somewhere sooner than that. There is a surviving spouse's benefit in the event of your death, but there are no child's benefits payable with this deferred retirement benefit. This is an example of an estimate for member self-service. If you have the Article 30 full deferred retirement benefit, as I said, the amount is assuming that you would take it at your normal retirement age. And then another option, which is not a benefit, but it's actually to say that you don't know yet what you want to choose, or you choose to wait to make a benefit choice, and you have up to 36 months from separation to do that. If you think you're going to be reemployed and again become a participant in the fund, and you want to keep your money in the fund and hopefully contribute again and increase your pension for the future, then you can leave your pension, and if you rejoin, your pension is considered continuous. If you only rejoin after 36 months, then you have a new period of participation. If you, as I said, take a withdrawal settlement, you can pay the money back. But basically, to people who leave their money for up to 36 months and they choose to defer their decision, normally they are possibly going to be reemployed, and then they want to just continue their pension benefit. And if they join within 36 months, that would be the case with just the period in between where they didn't contribute. If you don't rejoin within 36 months, we do need you to fill out your payment instructions and tell us what your benefit choice is, because you don't want to forfeit your rights to your benefit by not getting in touch with us and making your benefit choice. Then a few final points about part-time work, special leave without pay, breaks in service, and that once your benefit has been chosen and it's put into payment, you can't change your mind and say that you wanted to change your benefit choice and have something different. So, special leave without pay. We actually had a separate session on this, and the recording and the presentation is available on our website where all the other town hall presentations are. So I will also encourage you to look at that if this is something that you are considering, especially without pay, maybe to bridge to a specific time when you're then eligible for early retirement, for example. When you go on special leave without pay, you can choose whether or not to pay contributions. You don't have to, but if you do choose, you have to make the arrangements with your payroll office in advance, and you have to pay your contributions along with your leave without pay. You can't pay them retroactively. You have to pay them concurrently with your leave. And very important to know, you have to pay your share plus the 2/3 organizational share. So you'll be paying a lot more than you're used to, and then you'll have to consider whether it's in your interest. If you are choosing a withdrawal settlement when you come back from leave without pay, it wouldn't make sense because we don't pay the organization's share when we pay a withdrawal settlement. So it would only be interesting to do that if you're going to take a retirement benefit when you separate. So leave without pay, with or without contributions. If you do pay contributions, then it's just like you're continuing to participate and there's no change in your status as a participant. But if you don't pay contributions during a period of leave without pay, then one thing to be aware of is that if you should, for example, have a child during that period of leave without pay that you don't pay contributions, they're not yet recognized as a dependent in the event of your death, or if you got married during that period and you were to pass away, then the spouse is not recognized as a dependent or an eligible survivor in the event of your death. So again, I encourage you to see the session that was focused on special leave without pay. And again, if you're going to go on leave without pay and you want to pay contributions, you make the arrangements with your own payroll office in advance of your leave. Now, a break in service is when you actually separate and you come back later to active duty and to participating in the fund. If you're not a staff member, if you have a break in service, then you cannot pay contributions during that break. You cannot pay retroactively. You can't pay voluntary contributions. Just to be clear, that break will be a non-contributory period in your record. If you rejoin the fund after you started receiving a benefit, let's say you got early retirement, you started receiving a benefit, or you were paid a withdrawal settlement, if you come back into active participation, then you have a new period of participation with a new normal retirement age. I mentioned you can pay your withdrawal settlement back. If you happen to separate on early retirement, you started receiving a benefit and you were reemployed and began contributing again as a participant, we would suspend your retirement benefit until you separate again, and then you would have your old benefit plus your new benefit when you finally separate again. Okay, I think I'm going to move through here a little faster and mindful of the time, and we still have quite a lot to cover. One thing to be aware of is you can't make a change in your decision once your benefit's been put into payment. So run your estimates, make an informed decision before you submit your payment instruction. Now, I mentioned a few times that with some of these benefits, there are survivor's benefits payable in the event of your death. We have a dedicated video, which is really easy to follow and informative about survivor's benefits. And I encourage you to watch this video to just to give a summary that You have surviving spouses benefits. If you're married to the person when you separate from service and you remain married to them until the time you die, or if you have children under age 21 who have been recognized as your dependents, or beyond age 21 if they have been recognized as disabled by the pension fund. In some cases, even an ex-spouse is eligible to a surviving spouse's benefit. There are several conditions that have to be met, but just be aware that that is possible. If you have a current spouse and an ex-spouse who would be eligible, they have to share the benefit for surviving spouse, depending on the length of their marriage to you. And in the event that none of those is in your family composition, you might have a secondary dependent. If you have a secondary dependent that's now recognized while you're an active staff member, in the event of your death, it's possible you have that that person, a parent or a sibling, is eligible for a survivor's benefit in the event of your death. If it's a parent that is your secondary dependent, they would receive a monthly benefit for life. If it's a sibling, then they're eligible only up until the age of 21 in the event of your death. So just be aware that there are these various survivors' benefits. It's important that all of your family composition is reported to your HR office or your SBC secretary so that your record is complete. Even if you're not getting a allowance for them, it's important that you still report these family members so that they are reported to the fund, because they might be eligible for a survivor's benefit from the fund, even if you're not getting a benefit for them or an allowance for them. There's no limit to, for example, the number of children that the pension fund pays. There's a limit to the amount payable, but if you're limited in the number of children you can have a dependency allowance for, you could still report additional children for your records that would get transferred to the fund. If you have no spouse or children or ex-spouse or secondary dependent, any amount that you have paid into the pension fund from your own contributions that has not been paid out to you the time you pass away, or it has not been paid out to, let's say, a surviving spouse who then also passes away. If the sum total of your own contributions and interest has not already been paid out to either you and or any survivors, then there's a residual settlement that could be payable. And we ask you to fill out the form A2, PENS A2, when you become a participant, so that you could designate who would receive this, any residual amount payable. It's not often that there is any residual settlement payable in the event of someone's death, but we ask you to fill out this form in the event that one is payable, that a residual settlement is payable. We have a dedicated page to this topic and to this form because it, as I said, it's not often paid out, but we do get a lot of questions about how to fill out the form and what the residual settlement is. If you have any of these other survivors, then no residual settlement is usually payable, but please fill out the form A2. And if you have already filled out the A2 and you want to change who you designate, you can just fill out a new form and submit it to the fund, and we would honor the most recent form that we have on file. So for more information about survivors' benefits, including information about non-traditional unions, because or same-sex partnerships, for example, or marriages, we have guidelines on our website to guide you as to what is recognized for pension purposes for survivors benefits. Now, separation from service, how to prepare. This is the getting into a little bit more practical part of the presentation. And noting the time, I will try to get through this more quickly. And then our final section, which is on the Toolkit, the website and member self-service. At that point, I think we could open up the Q&A. But let me get through the separation from service and how you can prepare. Now, again, we have a dedicated video to this topic, which I'm not going to play now, but I highly encourage you to review this video. Most of our videos are less than 5 minutes long, and they're in English or French or Spanish, and you can access them on our website. So, how to prepare. Register for member self-service if you haven't already done so. Run estimates in member self-service with the separation date that you think will be the date you separate. Check all of your personal data in your member self-service account in your pension statement. So under the Documents tab in member self-service, you'll find your yearly pension statement. Attend a town hall like this one, or you can even review the recordings and the presentations of previous ones. And if you're very interested to go more in depth, you could take the pension e-learning modules, which are free, but you have to sign up, and the link is also on our website where you can learn more about your pension. And any questions that you can have, you can reach out to the fund. If you're a member of a specialized agency, your first point of contact while you're still an active staff member will be your staff pension committee secretary. All UN family, we are your staff pension committee, so you can reach out directly to the fund. And anyone who's retired reaches out directly to the fund for any questions they might have. So here are some web pages on our website that would be particularly relevant for you to review when you're preparing for separation. We have dedicated pages about separating and retiring. Also one on benefit options, which includes those comparative charts that I mentioned earlier. We have an overview of the separation process, both as a video and a web page. And we have general information about separation, how to submit documents, and excuse me, about taxation. We unfortunately can't provide information about tax to you. We do get this question a lot, and unfortunately we don't have the knowledge to to give you tax advice. But there may be some information on the UN's tax office website which might be useful for you. So in this presentation are links to these different web pages. If you go in member self-service, you will see the tab for estimate. This is what it looks like with a disclaimer in English and French to let you know that the data that's behind the estimate is what's in our pension system as reported by your employer. And it would be from the end of the year prior to the year that you're running it. So along with the pension statement, which gives your balance at the end of the calendar year, most recently 2024, your pensionable remuneration rate, for example, excuse me, would be what is used in predicting what your retirement benefit will be. So here you would put in your separation date, and then if you do want to put in a fixed lump sum amount less than your maximum, you could add that as well. You wait for the estimate to run and give you this notice that it's complete, and then you go to the Documents tab of Member Self-Service, where you will see a PDF document with your estimate. Every time you run an estimate, it will generate a new PDF document that you can review. Now, we also have a separation checklist, which is relatively new. We encourage you to print this out if you want, or you can save a copy. And then you see on the right-hand side, you have a checklist that you can actually check off. So if you've registered for Member Self-Service, you've run an estimate, you've reviewed your pension statement, attended a town hall, and maybe even taken e-learning modules, then when you get to the point of what other steps you need to do, you need to fill out your payment instruction form. This form is one of the mandatory separation documents that we need. It's what we need from you, and depending on how long for you, it should be 5 years or more, which is the PENSI 7 form. This form is in your Member Self-Service account under the e-forms, but it's also available on our website under Resources and Forms. When you fill out your payment instruction form, you have a page that requires you to put your bank details. We ask you to also provide a recent bank document or statement that has your name and account number that matches what you've put on the payment instruction form, so that we have an extra layer of assurance that the information you've put on your payment instruction is accurate and matches what's on your bank document. And we need a valid ID, government issued ID document from you. So a copy of your passport, which is still valid, would be a good option to provide. If you also have a spouse or children, then we ask for additional documents. Those are listed at the bottom of that page, which are like marriage certificate, any prior divorce decrees, birth certificates of your children, and another A2 if you have not already completed a PENS A2. So here's a separation checklist, a little bit larger than what was on the previous page, so you can see it better. So definitely the payment instruction, bank document, and ID document from you. And depending on whether you have dependents, then we would need your marriage certificate and these other documents if they apply in your case. All of these things can be sent to us through Member Self-Service document upload. And I think tomorrow you'll get more details about that if you're able to attend tomorrow's session. But we do have a dedicated page to Member Self-Service, including a tutorial and how to upload documents. So if you want to just look on our website, you can also see how you could do that. Now, in addition to your payment instruction, we need mandatory documents from your employer. And that is a separation notification from your payroll office and a separation personnel action from your human resources office, for example. And without all of these separation documents, we can't start processing your pension benefit. Now, some of these documents come through a digital interface, which makes it a little bit quicker, but it depends on how fast your organization prepares these separation documents and gets them to the fund. And of course, how quickly you get your payment instruction and supporting documents to us. If we have everything that we need, so these two documents from your employer and your documents, then in more than 90% of the cases, the pension benefit is processed within 15 business days of receipt of the documentation. there's any problem, like if you didn't sign your payment instruction form, or you put one date on page 2 and a different date on page 3, things like that will delay the processing of your benefit, and the fund will have to reach out and tell you that you need to submit something new, or that you've forgotten to submit something. Or if there's some type of discrepancy in any personal data, for instance, a birth date or name, then that has to be cleared up before the benefit would be processed. But assuming none of these discrepancies happens, and that's why we encourage you to review your personal data before you separate, so that anything like this could be cleared up before you separate, your benefit will be processed quite quickly after receipt of all these documents. And it doesn't mean that you'll get your payment 15 days after we get them, but we would process the benefit, and then depending on what part of the month it is, you would either be in that month's payroll. Payments are made at the end of the month for monthly benefits, and for any lump sum amounts, those are paid on a weekly basis. So every week there's a possibility to receive your lump sum, and the monthly benefits are paid at the end of a calendar month. So you should consider that there might be a month or two after your separation date where you're waiting to get your payment from the pension fund, again, depending on how soon we get the documents. On this slide, I've already mentioned some of these things about the tutorials, how to fill out the payment instruction. We also have a tutorial on that on our website, and how to submit the documents to the fund if you want to submit them through member self-service, or you can still always mail us original signed payment instruction form. If you upload it, we still need you to print out the form and sign it, and then scan it and upload it through member self-service. We do not accept electronic signatures at this point. This is page 1 of the payment instruction form. If you want to wait up to 36 months to make your benefit choice, you just fill out page 1 and provide your contact details and date and sign this, and just provide page 1 to let us know that you're going to take up to 36 months to decide what pension benefit you're going to choose. If you already know what pension benefit you want, then you fill out this page 2, which has the various options. They might not all be open to you, so you need to run your estimates, see what options are open at your separation date, and then fill in the only one box. You only get one option, and then sign and date it. And then on page 3, you have all the banking details. If you take a monthly benefit only, you fill out the top part for the banking details. And if you have a lump sum and you want that paid to a different account and in a different currency, you can fill out the lower part of the form with a different bank, different currency for lump sum or monthly. And then contact details of and sign and date the same date as page 2. So there's a lot of detailed instruction about how to fill out the payment instruction form here on these slides and in the tutorial on our website. We also, in member self-service, have a way for you to track whether or not the fund has received your separation documents. So under the Proof Documents tab, we have, this is empty because we haven't received any. But if we look on this slide, on the left, you can see that one of the separation documents has been received. And then on the right-hand side, here we have dates that the fund has received your payment instructions and the 2 separation documents from your employer. And if you see all of these things populated, then you know that in most cases, within 15 business days, your benefit will be processed. But if you look and you see, for example, on the left-hand side, we've only have one of the separation documents, then there's not really a point to reach out to us to ask when your benefit will be paid, because we can't start processing your benefit yet because we don't have your separation documents complete. So we encourage you to track the receipt of the funds receipt of your separation documents to see where you are in your separation process and whether the documents have all been given to the fund. Once they're all with the fund and more than 15 days have passed, then you can reach out to us and ask about your pension benefit. But before that, I would say that it's either you or with your employee organization where the delay is. Now, finally, the pension toolkit, and I'll go through this quickly so we have time for questions. This is our website, UNJSPF.org. And this is what our homepage looks like. We have in English and in French. You can see at the top left, it's English. You can opt for French, which has been translated. All of the attachments and everything are translated in French. But we recently also expanded the language options to all 6 UN official languages. But besides English and French, it's an automatic translation. So it's AI generated, and there might be some terminology that's not exactly the same as what you might think it would be if it's one of the terms that's automatically translated. But the web pages are then available now in all 6 official languages of the UN. However, not all of the documents are translated. So I do hope this will be helpful to those who don't have English or French as their main languages. But just be aware that not everything is translated automatically. So for instance, we have resources like booklets and so forth. Those aren't going to be translated automatically if you choose Russian, for instance, as one of the languages to read the web pages. So now on our website, you can choose your situation. And for purposes of this town hall, let's say you are going to choose separating or retiring. And then you'll see the different topics that are most relevant. And you can then click those and they will take you to more specific web pages on our website. Also under the resources tab, just to highlight a few things. It's not highlighted on here, but the second item down is about member self-service. That's an entire web page dedicated to member self-service. More tomorrow on that. All of our forms are there and the e-learning modules you can see. Now, pension town hall sessions, that's where you will find the link to all of the prior sessions and so the recordings and the presentations, the slides, if you want to go and review any of these. Also, the informative videos that I've shown a few slides of are accessible through this resources tab and then all videos. The videos are hosted on a YouTube channel. You can subscribe to our YouTube channel, and they're in English, French, and Spanish. And then our booklets also in English and French, some in Spanish. So here, an overview of the different videos that we have and the links to the sites. And then some more about our web page, we have a newsletter you can subscribe to. You go to the top right of our homepage where it says get our newsletter, and then you can sign up and they'll be sent to your email address. And then member self-service, you can access this through our website. I highly encourage you to register if you haven't already. You'll need your 9-digit unique ID, which is an identifier that the fund's pension administration system has given you. It's just a random 9-digit number, but you need that in order to register for member self-service. If you don't know your unique ID, for some, it's on your payslip, but not all organizations provide it there. If you need your 9-digit unique ID, you can write to the fund at request UID only at unjspf.org. Ideally, write from your official work email address, because we will ask a few questions to verify your identity before we give you your ID. And once you're registered, if you have any issues, technical issues, we have a dedicated email address, MSS support, that you can use to reach out for help. We do recommend that when you register, you use a personal email address and not your work email address, so that once you separate from service, if you forget your password and you need to do the password reset, that email from the fund will go to an email account that you can access, because most people can no longer access their UN accounts once they separate. If you've already registered with your work address, you can change it in member self-service. Just log in, go to the account tab on the top right, and you can change your email address, your registered email address. This is the dedicated page for member self-service on our website with tutorials and videos and links to register. Again, once you're inside member self-service, these are some of the various things that you can find. I encourage you to attend tomorrow if possible, but mainly for you, if you're separating, the important things will be check your pension statement under the Documents tab and run estimates, and then also learn how to upload documents through member self-service. Some specialized agencies don't have that option open to their staff, but if you see this MSS document upload, that means that it's open to you to submit documents to the fund that way, and we will recognize them as originals if you submit them through member self-service. Okay, finally, contacting the fund. If you're a member of a UN agency, then your first point of contact while you're an active staff member is your staff pension committee secretary. And if you're a member of the UN family, you can contact us directly here at the fund. We have a contact us page, which will take you to what you see here on the right. Online means that it will link you to our contact us page where you can submit your query through a form, and it comes into our ticketing system, our CRM, where we will receive your request or your query. You'll get a confirmation to your email that we've received it, and you'll have a case number so you can track. And then we also have a phone option. You can call from a number of countries toll-free. You just click there and you'll see all the different countries and the toll-free number. Our contact center for the phone calls is open 24 hours, 5 days a week, Monday through Friday. And then for walk-in services, we have those in New York and Geneva on Tuesdays and Thursdays, and the dates, the times are shown on this page as well. So I hope that that's been helpful, and I'm sorry to have kind of rushed, but we have about 15 minutes So, Dilbar, how is the Q&A? Let me just stop sharing so I can maybe see as well.
Thank you, Denise. We received some very interesting questions, and
Okay.
I'll try to lump them according to the topic. One question is around practical aspects of separation. Do participants need to submit all of their documents using MSS document upload function, or can they do it in person? And the second question about the documents is about the marriage certificate and divorce decree when they are not in the original English language. Should they be translated prior to submission to the fund? Thank you.
Thank you, and thank you to all of you for still being here and asking some of your questions. I hope that we'll be able to get through enough of them. So the document submission, there are different ways. As I said, if you have member self-service document upload available to you, you could submit scanned copies of all of your documents that way, but you don't have to. You can still submit some in person if you happen to come to one of the walk-in services, or you could mail documents to the addresses, which are also on our contact page. But the easiest thing I would say is to use member self-service document upload, because it's pretty much immediate. You see what you upload. It still remains in your outbox within member self-service, so you can see what you've sent us. We accept them as if they're originals. So I would suggest that is really the ideal way to submit documents nowadays, that it's available. And as far as marriage or divorce decrees and so forth, we do need them to be in, I mean, English or French are the official languages of the fund. If you don't have one of the, like an international type marriage certificate or divorce decree that's in a language that one of the official languages of the fund, we do ask you to have it translated. Yes. So I hope that was everything. Yeah, thank you.
Thank you, Denise. The next question. If I opt for deferral of a payout of the benefit, may I receive the ASHA coverage during the time of deferral? If I opt for deferral of benefit, does it make any difference in the retirement amount I would receive yearly? During the deferred retirement benefit, do I have to make any contributions? If I defer my decision for up to 36 months, does it make any difference in the payment I will receive when I retire?
Okay, let me see if I got all of that. Okay, one was during the deferment of choice period, if you can have ASHI. I mean, we don't advise on ASHI because we don't administer ASHI. At the fund, we receive information from the insurance that tells us how much your premium is to be deducted from your pension, but we don't determine the premium. So I would say for that, you should consult your health insurance provider or your, ASHI if you're going to fall under your organization's health insurance. I would check with them. But generally, I think if you don't have a retirement benefit, you are not eligible. So if you're still in that undecided period, then I would think it's no. But again, that's not for me to be the authoritative source on that one. And then let me see, there was another part about if they choose a deferred retirement benefit, but they're not yet in payment, can they continue to pay during the period after they separated? No. So once you separate, you cannot make contributions to the fund. And then I think, was there another part of the question?
Yes. Does it make any difference in the amount that they will receive once they decide on the payout?
So was this with deferred retirement benefit? So
Correct.
if you, thank you. So if you separate and you choose a deferred retirement benefit, which I would say probably because you haven't yet reached your early retirement age when you separate. So maybe this is your only retirement benefit option. And you cannot pay contributions after your separation date. So the idea is you're waiting till you reach normal retirement age to start having your deferred retirement benefit paid to you. If you start receiving it earlier, you'll get less. I hope that's answering what the question was intending, but if not, please go ahead and fill in, Dilvar.
Thank you, Denise. I think the question is, what if they separate and defer the making choice for up to 36 months? Would that choice differ if they defer perhaps at the end of the deferral period? Would their choice be different as opposed to their separation date?
Okay, well, your contributions will not accrue any more interest if you leave them for 36 months. So if you make your decision on day 1 or day end of 36 months, it's not going to give you a higher amount to wait 36 months to make your decision. So your entitlement is based on your separation date. So that's important to keep in mind. And no interest is accrued beyond separation, and no contributions are payable beyond your separation date.
Thank you, Denise. Another question. I separated before early retirement age with more than 5 years of contributory service and have opted for deferred retirement benefit. Is the option for restoration available to me if I am able to re-enter the fund after 36 months from the date of separation? What is the difference between opting for restoration before 36 months and after 36 months from the date of separation?
Okay, let me see if I understood this. So the person has separated before? No, they're saying if they separate and they choose deferred retirement benefit.
Yes, so they've separated before reaching their early retirement and have opted for deferred retirement. So I'm assuming it's deferred retirement benefit, not deferral of choice.
Yeah. So if you have a deferred retirement benefit that you've chosen, but it's not yet in payment, and then you are reemployed within 36 months, and you haven't yet started receiving that benefit from your first period of employment. You chose a deferred retirement benefit, and then you're reemployed within 36 months. The question was, can you restore the... Okay, so if you join within the 36 months, actually you're going to have continuous participation where it would continue from where you stopped, but you would have a break in contributory service. If you joined after 36 months, then you would have an entirely separate benefit, and there's an option to restore a deferred retirement benefit under a relatively new Article 24 bis, but it cost neutral to the fund, which means that in almost all cases so far, it has not really been beneficial because you're only getting an actuarial value restored and not the actual number of years of contributory service that you had from your deferred retirement benefit. So back to the first part of it, if you have a deferred retirement benefit and you rejoin within 36 months, you're going to just continue, you'll have continuous participation because you rejoin within 36 months without a benefit being paid. Which means that ideally you have rejoined at least the same level and not something lower, because if you took a lower income, then eventually your pensionable remuneration rates will affect your future benefit. So as I said, we look at the last 5 years of service and take the highest 36 months and the average of that in the calculation of your benefits. So that's also something to keep in mind if you are in this scenario where you rejoin within 36 months and continue, but then have a very different pensionable remuneration rate. I don't know if that was clear, but
Yes.
Dilbar, please feel free to add if you want.
Thank you, Denise. Moving on to the next question. If someone opted for a deferment of choice and the period exceeded 36 months after separation, do they still have the option to opt for a withdrawal settlement?
Well, if the 36 months has elapsed, you can request your withdrawal settlement if you do so within the next 2 years. If you have not claimed your benefit after that period of time, then you have technically forfeited your rights, and you would have to request that your right would be reinstated so that you could be paid that withdrawal settlement. So the main thing is to be aware that you could forfeit your right to your benefit if you don't claim your benefit within, in this scenario, it would be 5 years after separation.
Thank you, Denise. Next question is on special leave without pay. During my years of service, I took special leave without pay once, but this is indicated as breaking service in my pension statement. Does this need to be corrected? Another note, I did not contribute to the pension fund during this leave period. Thank you.
Does it need to be, the question is whether it needs to be corrected because the period that's listed in your pension statement shows break in service rather than leave without pay. I don't think that it would affect the amount, but it's, I guess, not entirely accurate and would be, I mean, Dilbar, I don't know if you want to advise on that one from your accounts background, please.
Yeah. Thank you, Denise. So just to inform everyone, when you look at your pension statement, whether you took a special leave without pay or breaking service, it will be reflected under the same column. So you would not know whether it was breaking service or special leave without pay. If you really want to make sure that your special leave without pay is reflected correctly in our records, I would suggest reaching out to us using one of the official channels so we can review your file and confirm what we have on records for you for that period.
Thank you.
Thank you. Another question, if I separate prior to early retirement age, can I defer the decision for a year and then take early retirement benefit at early retirement age? Or do I have to wait until normal retirement age? Could I take a lump sum?
Okay, so this was a question, if they separate before early retirement age, then your benefit options are determined at your separation date. So if you're not yet 55, for example, when you separate, you're not going to have new options opened up to you when you finally do reach age 55. So unfortunately, I think the answer is no to all of those parts of the question. So you separate before you reach early retirement age. Your only options will be a withdrawal settlement or a deferred retirement benefit.
Thank you, Denise. If someone elects a withdrawal settlement, can it be directly deposited into their rollover IRA account? Will taxes have to be paid upon rollover?
Okay, so you can have your withdrawal settlement paid, rolled over to an IRA, and we do have information about that on our website. As far as the tax, I would not dare to answer about the tax liabilities. Again, I don't know the laws about the taxation on that. So sorry.
Thank you. Another question is on the estimate, how accurate they are, and if somebody elects a deferred retirement benefit, but would like to know the value of their benefit prior to them reaching their normal retirement age, how would they get those numbers?
Okay, thank you. So as the estimate, how accurate is it? So the estimate tool is it is using the information that's been reported by your employer. So it's as accurate as that data that we've received from them. And keeping in mind that for most, in most cases, then the reporting from each organization is done yearly, and the reconciliation is done for your pension account each year. And as reflected in the pension statement, it's the status at 31 December, currently would be 31 December 2024. So if you run your estimate now, it's going to assume that you haven't had, a break in service, for example, between May and July. I mean, that would not be in your record yet for the most part. So we do know that for people who have breaks in service, part-time employment, sometimes there's a delay in the reporting or the recording of those periods. And if you're somebody who has had a lot of changes, like in percentages of employment, so part-time periods or breaks in service, it's good to check with us. I think if your estimate does not look like what you think it should look like, but generally the estimate tool does work. It's the calculations are accurate, but as I said, the data is using the balance at the end of the calendar year. Yeah, Dilbar, do you have anything to add to that? Okay.
No. So yeah. So the last question is on FAR. Somebody wants to confirm their understanding. My retirement benefit is determined by the highest 36 months of contribution made in the last 5 years of service. So if I had special leave without pay for the last 8 months before I separated, these non-contributing months won't reduce my retirement benefit. Is that correct?
So we would look at the last 5 years where you actually had contributions, and that would be then the highest average from the figures that we have. So if you had leave without pay without contributions in the last 8 months, that was the question, right? If that's going to be like 0, 0, no, we wouldn't, it wouldn't affect in that regard. We would look at the months that you actually had contributions and go back to find the highest 36 months average out of the last 5 years.
Thank you, Denise.
Thank you.
These are all the questions.
Oh, thank you, Dilbar. So, yeah, I hope that there was a lot of information that made sense to you and is helpful to you, and that you now have an idea of where to look on our website for the additional information that will help you in your planning for separation. Please do join tomorrow if you can. And again, I encourage you to register with Member Self-Service and review the videos about separating from service and benefit options so that you can feel like you know what your pension is and make the right decision for you. And then as far as the practical aspects go, the paperwork, the documents you need to complete and so forth, we have that information to guide you step by step in filling out your payment instruction form. That's all available also on our website. So take a look, and if you still need to reach out to us because you have some more questions, then use the Contact Us page on our website to know how to reach out to us or come see us in person if you're in New York or Geneva. So thank you all very much for attending, and hope that it was fruitful, and thank you for your questions. And I wish you all the best as you plan for separation or just in learning more about your pension, if that's why you're here. So I wish you all a good evening or day, and until the next time, thank you.